Well, ladies and gentlemen, bit of a boring day in Bitcoin to say the least. Nothing much has been happening other than the fact that Besson and Trump have turned around saying that they're pretty much close to a decision in picking a new chair. So, when I say new chair, we're talking about a new Fed chair ruler, for the better word. No more good afternoons, no more purple ties, no more coughing. Tonight, we're talking about the bid and the ask. Because quite frankly, if you don't understand what this is about, then you're not going to understand what is the ebb and flow of the buyers, okay, and the sellers. And if you don't understand what's going on with these guys, then why are you trading? You can't just look at candlesticks. You've got to understand what makes the candlestick. Who's doing more of what? Are we seeing a lot of buyers? Are we seeing a lot of sellers? So in this video, I'm going to break that down for you so that by the time we're done, you're going to have a good understanding of how to really navigate the charts when you are effectively getting ready to take a trade. What do you need to take into consideration when we are referring to the idea of the bid and the ask? Let's get with the program, gang. So you, as the new trader, are like, all right, Tino, what do you mean about bid and ask? What is it? Let's simplify it. Bid is when someone places an order and they want to buy. So when price comes and taps that bad boy, the order is picked up. In order for price to hit that bid order or buy, someone needs to sell. So people, they sell when prices are dropping. Who are they selling to? They're selling to the bid. Cool. When price rises, orders are coming in. And who are these guys? These guys are buying. Because price is rising. Yeah? And who are they buying from? The sellers. So when you split it all up, you've got the guys who are bidding. So these are the bids. Bid, bid, right? Here are the offers. Sell, sell, sell. Sell, bid, bid, right? Now, when you go into more detail about bids and offers, you would understand that the bid will be selling, in essence, towards that guy, okay? So it's in the opposite direction. It's not crossed, all right? Now, there are a number of things that come into play when we're considering the bids and the offers or the ask. There are a couple of things that you might hear me talking about in the sense of absorption. And then you've got exhaustion itself. I'm not going to spell that. But understanding the ebb and flow of the bids and the offers, this is going to help you understand if price is getting ready to make a move or not. All of you would look at this and say, it's a consolidation, Tino. Yeah. You know, let me draw my little line here. I draw my little line here. And whatever it does and it breaks out, awesome. Let me go back in the chart and draw as many of these as I can find and make the assumption that whenever I see price doing this, I'm going to assume it's going to try and break out of that and go to the upside. Or, depending on the day, it might break out and go to the downside. Okay? The problem that we've got when we look at this sort of thing is we look at it from a structural point of view. And we think that by going back in the charts and trying to draw off as many of these instances, okay, we're then going to assume that the next time we see it, it's going to do the same thing as what we saw before. Granted, if you don't know what to look for, then what are you going to do in the charts? You've got to train your eyes to be receptive to understanding how something could develop. No different to a V-shaped reversal. When price is coming down, 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 then what happens? And then it shoots all the way back up. You're then going to go into the chart and understand what kind of candlestick formations are going to come into play to help you understand whether that is going to be a point in the future that if you do recognize price dropping, when it starts to move back up again, are you going to see a specific candlestick formation that's going to make you believe it's going to continue higher? Now, take that, do our little range. And we're going to do it from the retail trader's perspective. Okay? I'm expecting price. So this is what a retail trader would say. I'm expecting price to break out to the upside because they've been consolidated. This is a key area of support. Okay, I've drawn this off and I've had this line drawn in my chart since 2001. And we're in currently 2025. And this area of support here tells me it's a massive area of support because price touches it all the time. I mean, it's just amazing how when I see it go down and down, it just always hits that line and it always reverses. So this special 2001 support line tells me that every time price hits it, it's going to make a bounce to the upside. As long as I see a bullish candlestick moving away from it, I'm going to put the house down and then hope that it's going to continue up. And guess what? It does that, ladies and gentlemen. So then the retail trader comes in with the idea that his expectation of the marketplace is based on what he can see and what he's trained his eyes to see before. And if it looks like what he's seen before, it's more than likely going to be the same thing again in the future. Okay, cool. That makes sense. This is not to ridicule anyone that uses support and resistance. No. Now we're going to take it from the point of view of the person who understands order flow. Price has been making a significant move to the downside, or I already know that the bids are in control of the game. Prices have been going down. That means the sellers are aggressive. Okay? They are hitting the market. They are taking orders. They are shoving it down. They want to get rid of their asset. Okay? That's forcing price to go down and down. Then all of a sudden, we start to notice price consolidating inside of a range. Now, as an order flow trader, I'd say to myself, hold on a second. I'm seeing it consolidate. What do I need to pay attention to? Do I pay attention to the candlesticks? Or do I pay attention to the accumulation of how many times sellers have been trying to smack price down and they've not been successful at doing so? What does that tell me? It tells me that the bids are absorbing. You get exhaustion as well, where an aggressive move to the downside happens and then all the sellers are all in one spot. And then they just can't sell anymore to get prices lower. And then price ends up reversing. Absorption is similar. When price hits a specific range and then it just bounces and bounces, for every time price goes down and then price comes straight back up, and you can see the number of orders coming in showing that for every down candle, it's not as aggressive as the candle trying to push price up. When you understand order flow and you see that information in terms of the bids and the offers, you'll then come to the consensus that the bids are the ones who are controlling price. And if you can identify an instance in the chart where you can understand if that is coming into play, then your expectation of price breaking out to the upside is not just based off a candlestick. It's actually understanding the DNA of the candlestick, okay? Because when you look at a candlestick, what color is it, ladies and gentlemen? It's either going to be a green candlestick or a red candlestick. Or if you use the hybrid system, it's going to be a fancy green vector, a blue vector, or just a gray or a white candle, okay? As an order flow trader, you will get the idea that the bids are absorbing everything. Now, when you get the understanding of order flow, when you start seeing bids coming in and they're holding price, they're not letting it go down too much, and they bring it straight back into this range, you're looking at it and saying, okay, I'm starting to see dominance to the bid side, okay? So those guys are holding out. And because I understand the story of the bids, that means the only next logical thing for the bids to do is to what? Is to offer price. And that means to sell. Because remember, bids are people who are sat in the market waiting for their buy orders to be picked up by the people who are selling, okay? Equally, the offers or the ask are effectively sell orders sat in the market waiting for buyers to come in and sell to them. That there is what someone in order flow would come to the understanding at establishing what is support and resistance. Is it based on a line, or is it based on what activity is happening inside of the zone? Now, of course, you've got platforms that offer you exo charts or Atos platform, Jigsaw, and they give you depth of market, which shows you the number of orders that come in, okay? And you can then start to understand if there are bids coming in or if the sellers are going to get price ready to roll over. Because what if price from this point drops? what would you be seeing developing here? You would be seeing a low number of bids coming in. That means you will then see that there's a lot of sellers hitting this range, and the sellers are effectively controlling price, okay? In essence, not allowing it to go down anymore because they're trying to test the strength of the guys who are trying to support it. So as long as they've got someone here that they can sell to, they will keep on selling until they get an opportunity to keep selling more if the bids don't show their presence. If the bids don't show their worth, then of course price is going to break down. And it's not breaking down because your key support zone or the line, your 2001 trend line has been broken. It's because the bids have not been present to sustain price further to then continue it to the upside. On the flip side to that, if the bids aren't present here, it might mean that they are present further down. So some guys might be thinking, you know what, I'm going to start loading up in this position. I can pick up some longs from here. And then when price drops all the way down to this area here, I'm going to step in with a much bigger order, absorb all the sellers because the market would be on the belief that price is dropping. So what's going on? Sellers are hitting the bid. Okay. They're hitting the bid. And when they hit the bid, these guys are the buyers. And those guys are going to want to what? Sell higher. Whoops. They're going to want to sell higher. So you already know that there's going to be a transition in the book at some point. To show you an example of how you can use the relationship between the bids and the offers, draw your attention to this right here. This is by Coinank, and it gives you the aggregated spot order book depth difference in Bitcoin purchases, okay? Greens are the bids. Reds are the sells, okay? Bids, buys, offers, sells, okay? But we understand it as, you look at it and think green means buyers, price has to go up. Red means sellers, price has to go down, okay? So again, see it from the perspective of the retail trader and then look at it from the perspective of the order flow trader. Now, this image here was yesterday, okay? Now, I looked at this image at roughly around this range right here, okay? When I provided the trade setup. Now, yesterday's trade setup is right here, and that was on Bitcoin, okay? I had an anticipation that Bitcoin was going to come down to then sweep and reverse to the upside and take out the 88,144. That's what my expectation was, okay? Now, collating the idea of vector candles and understanding that we've come down to a massive area here where they had previously hit the sellers and the bids have bought up a load of Bitcoin, going back into this chart right here helps me understand what the relationship was like with the bids. Okay, now as you can see here, the bids were coming in and price was consolidating, but it wasn't going down. It was just holding out. Okay, and it kept on rising, but the bids were present. Did see a few offers coming into play, and it was because of this right here that gave me the clue that there is participants in the book that were preparing to mark prices higher. Okay, because you've got to consider that we have been in a bit of a drawdown and we are anticipating a little bit of a rally to the upside. Okay, then as I gave the projection out, this is what unfolded. Prices kept on consolidating, but the bids kept on coming in. So there was more aggressive buying, but prices down, Tino. Does it mean that people are selling? Well, of course it does. But they're selling to who? The guys that are buying. So this chart was giving me a clue that we're starting to see activity from the buyers. Then at the end of the New York Live, I gave the idea that we're still in line for price to continue to the upside. We have to absorb a move down to see the recovery back up. Look at what was going on. Bitcoin gave the stop run right here. Now I anticipate that when they're going to move prices up, the bids have to step in first and buy it at a discount to then offer it out. That's exactly what we saw happening in the end on the setup. We saw the market lower. We had a green vector candle recovery point, which happens to be the spot where offers were triggered to mark higher. But it's also the same spot where bids came in and defended price. And that came right here. And then we saw the move down, and then they made the reversal back up. But what we saw was this, and this is what led me to understand that if the relationship of the bid and the ask based on this chart is a key clue at helping us understand if price is going to move in one direction to the next, then it's another tool that we can all use to understand if Bitcoin is going to go up or down. And we're using a good metric because it's spot, okay? People want the Bitcoin, okay? Look what happened. Notice how this area here was the first reason that I anticipated that price was going to start coming up because of the aggressive nature of the bids, okay? We saw this little drop here, which tells us in negative terms, okay, that they started to sell, okay? So the bids were starting to take some profits from these ranges because look, price was going up beforehand. Took some profits, happy days. So the offer started to come in, right? Then all of a sudden, they used that price drop to fuel more movement, okay, in terms of bids. So they encouraged people to sell and then they started buying more. Awesome. Then what happens? Price bottoms out, okay? Then what we start to see as we head in towards the open of the New York market, the bids disappeared. Then we started to see the offers coming in, okay? So they bid, and then price starts to rise. They've used it as an opportunity to load up a little bit more and sell out. So they sold their position. Once they sold, they were then able to buy a little bit more, which then ended up bringing this area here, okay? They found the discount and thought, okay, this is cool. Notice how price consolidates in this area at the time when you see this volume bars right here showing stability in price. Look at that. That's where price was, okay? Which happens to be this area. Where is it? That area right there, okay? And then what happened was the stop run. Someone offered out on this big move to the upside. It then slumped to the downside. The sellers were engaged, but it was the bids that were engaged. The bids came in aggressively. This was the last attempt by the market to manipulate price. At around that time, ladies and gentlemen, what do you think happened? Go into the chart and look at Bitcoin from yesterday. It was your red, your green, blue, violet vector candles. By the logic of the hybrid system, without looking at this, okay, you understood that when you see red vector candles, there is an anticipation that price is going to come back to them. You then need to wait for price action to prove that. Stop in volume candle 1. Blue vector candle coming into play. Comes back up. The next candle comes in and shifts price. From that point, that's when Bitcoin made that beautiful move to the upside and cleared out our target, which is what we wanted them to do, to come up to the 88,144, okay? So what am I saying to you? Hold on, Tino, you just said that this chart right here is a key tool, okay? So do we need this chart or don't we need this chart? This chart just gives you the understanding of the relationship of the bids and the offers inside of the candlestick. The color candlesticks, the vectors, that represents this. So now you know what a candlestick means by the logic of the bid and the offers. Because what you saw happening here was the big stop run where the bids came in and brought aggressively. They bought loads of Bitcoin at that point. Then they started to offer it out. Price starts to climb. Then the offers took control. Where are the bids? Where are the bids? No one is bidding here. Yeah, this dude right here that just participated because he felt like he missed out. But where are the bids? Why is no one buying now? Why? Because they're looking to sell. And that was evident with all of these candle blocks right here, suggesting that the offers were getting engaged, that the bids have done the business. They started it off at 9 o'clock in the morning-ish. They were bidding, buying it up. And then, of course, they gave us the big stop right there, the stop run to mark the sellers lower because they were convincing them that prices are going lower. So they were selling. These guys were absorbing it and buying it up. Then they gave them the last trap. Oh my God, it's going down. Let's go short on Bitcoin. And then, of course, it makes the reversal back up. Where are the bids? Where are the bids? Non-existent. Why? Because they've all switched on the book. Now they're selling their Bitcoin and retail's coming in and buying it up. I applied the same logic today on the NASDAQ and the S&P. So here was the NASDAQ projection for the Platinum members. And I expected NASDAQ to come back up into this red vector candle recovery zone. But what do I wait for? I'm waiting for the relationship of the bids and the offers to come into play. Go and have a look at what NASDAQ did today. This is the S&P. They made the move up in New York. They came down, right? Now, if you remember yesterday's price action, okay, how Bitcoin gave us the red vector candles in the Brinks box. Go back to it. Remember this? That was yesterday. Green candlestick, red candlestick, shift out to the upside, okay? Now, go back into it. NASDAQ, well, let's go to the S&P first, because that's where I took the trade. Go to today's price action. What do you see? Red candlestick, red candlestick. They started off with a green one, came down, instant reversal, okay? So what's going on here? No different to what we saw here with Bitcoin. The aggressive nature of the bids came into play. They bidded price on the drop to the downside. New York ain't ever going to be paying premium. They marked prices lower. They left the vector candles inside of the Brinks box, made the recovery up. Now, I took this trade and I applied this logic today on just a couple of funded accounts that I've got. Here are the entries. So I took the trades here, and this was at 5 o'clock because I was effectively trying to exploit that logic. So they came up, recovered it, and I took the trade inside of this range over here, okay? Took that trade, went long, price marked up, happy days. No, where was it? There we go. Not that, that was the second trade. So here we go. New York open, they made the stop run up, they come back down after the vector candle recovery. So I opened the position there, okay? And then killed off the position up here, right? See where I took the entry? Price is dropping down, the bids are coming in, and then they made the reversal back up, came back in to test that zone, which is your vector candle recovery regions, which is that violet vector candle. I said I'm going to hold on to the trade because I'm expecting it to go back up and recover it. Happy days. Why? Because the bids had taken control. They were bidding and bidding and bidding. They come back into the recovery of the vector and then they shifted back out. Then we saw the move up and I closed off at that spot. Then I reopened another trade as we're trading towards the all-time highs, not the all-time highs, to the peak of the actual order book itself. And we opened a few positions here and then we closed off a few positions at the top side there, exploiting a continuation move based off this blue vector candle, riding the move to the upside, okay? When you have an understanding of the bid and the offer, it's going to aid you in understanding what's going on outside, or should I say inside of the candlestick. It's all right just looking at a candle, but what's going on in here? All right? Just remember the rule. When prices are dropping, it means that the bids are coming in and getting their orders filled, their buy orders. You're then looking for a point in the chart when the relationship between the bids and the offers starts to adjust, where it looks like price is consolidating, but it doesn't seem to be breaking down. And that could be an indication of absorption. You might see that as little candlesticks creating wicks like so, or big candlesticks like that creating big wicks. It might actually look like big candlesticks, okay, that start off like that and then they end up becoming long wick-sided candlesticks, which look like stopping volume candles, okay? When you start seeing that appearing at the lows of a move, you could then be of the understanding that the bids are trying to trap the retail trader. Secondly, you've also got the idea that the speed of price, the speed is going to represent what's going on. When you see price aggressively move down, okay, and then instantly bounce back up, you know full well that the bids have just manipulated the guys who are selling. They're going to want to make some money off the back of the liquidity coming in off the sellers. Because remember, their margins are all over here if they're going on leverage, okay? And the same thing applies for the offers. When you see a big spike move to the upside and it looks like an aggressive candlestick, woo, happy days. And it looks like a green vector. Well, what do you know about a green vector? You know that they're marking their positions high. They're selling aggressively. That's why you anticipate the recovery of the vector candle. That's why when the offers are being hit at the highest point, and if there's no one else wanting to sell at higher prices, okay, they want to start buying things again, then price is just going to roll over. There's your vector candle recovery. With that being said, if you've made it this far, just comment, I know the bid. Because this is going to help you try and establish what's going on with price. When you're stuck in a range and you're looking at candlesticks, I always say to you, look for the green and blue vector candles. And that's just me trying to simplify it for you. But the reason why we say look for blue and green vectors to appear at the lows of a move is because it could be suggesting that that's when the bids are going to start changing their idea and they want to offer price higher, which is naturally going to trigger a move to the upside. If you've enjoyed tonight's flavor, ladies and gentlemen, make sure you hit the like button, subscribe, and don't forget there is a 20% discount on the Platinum membership with regards to the trade setups. And we are in the process of updating and uploading all of the new masterclass sessions, which cover various strategies on the hybrid system, which are all done on this whiteboard. With that being said, ladies and gentlemen, mad love and respect, and I'll be tuning into you all tomorrow. Peace.